The next 60 days in markets could be very, very interesting. We have seen in North America and Europe an increased slowdown in economic growth where central banks are now in the process of cutting interest rates to accommodate this. For example, we cut a quarter point this morning in Canada, this being the third cut here. And it's likely on September the 18th, we will get an interest rate cut from the Federal Reserve, this being the first one. So in markets, currencies are often priced based upon interest rate differentials. So when you're cutting interest rates, markets have a tough time pricing what a currency should be in relative to another currency. So this creates volatility in markets. As well, the economies are slowing. So this means that the earnings forecast and the economic growth models have to be revised. And as a result, stocks could be quite volatile, more so to the downside because nobody really knows what the earnings growth will be if the economy is weakening and in fact in a recession. So this is going to create tremendous volatility over the next several months, not to mention that Trump's sentencing on the 18th, in fact, could see him in jail in the next couple of weeks, which would be, I think, a very shocking event for the markets. I think it's quite highly likely that no matter who wins the U.S. election come early November, the markets and the world is going to see a completely new version of what the U.S. is compared to what it's been the last 4 years. For example, one of Kamala Harris's policies is to increase the capital gains rate to 44.6%, but also this gain could be on unrealized gains in the stock market. For example, if an investor has bought a stock at $10, it goes to $20, they could be taxed at that 44.6% rate even without selling the stock. So this creates tremendous uncertainty. I saw a member of Harris's teams on CNBC this past week trying to defend this policy, and the hosts of CNBC were really having nothing to do with it, saying it's a very dangerous policy. And I agree, not knowing, like having a capital gains rate that high and not knowing the policy is just terrible for capital formation. So this could be a real detriment if she decides to implement this policy. On the other side, Trump, if he gets reelected, his favorite tactic are tariffs and sanctions, which are very, very difficult for countries to work economically through. And if he does this when he gets in, this could also slow economic growth. Also worth mentioning is the terrible relationship Trump has with the U.S. Security agencies, with the government workers, and with the international community. He is a threat to the existing system, and I think this will be on full display with the Trump victory. So expect after November 5th, uncertainty to actually increase potentially rather than decrease. No matter what happens with all the volatility we're going to see, it's important that investors remain calm and that they do have a strategy in place. For example, we only have a 20% weighting in equities. So if we do get a hard sell-off in equities, we will actually be buying more as opposed to panic selling. As well, we have a high fixed income component. With interest rates being cut, it's quite likely in the short run, the price of our fixed income assets will go up as interest rates come down. So we have a nice hedging mechanism in place, but it's important that we stay with the strategy. We can profit from the volatility. And the most important thing is staying calm and realizing that with our portfolio design, you're not going to take a large hit to capital no matter what happens.